Welcome into Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy. Boy, oh boy, what a day we've got on our hands here today. I just took the baton from Mr. Tony St. James. What a great name, isn't it? And a great voice, too, by the way. Let's take a look and see what these markets are doing. I'm in the halfway point, right? So let's see what we've got in store for us so far today. We'll start with corn. And it's an up arrow, some green on the screen. We didn't have that going on during the radio show that I did earlier this morning. And some folks have asked when I talk about, I mention the radio show a lot. It's Sirius XM channel 147 if you want to catch it. And it's every day. I do it every day from 7:30 to 8 in the morning. That's Central Time. So it's 8:30 to 9 Eastern. All right. But here we go. Corn's up 3.5 cents right now in March. 487.5 is last. And that's in the middle of a, well, call it an 11-cent range, just under. July's up 3.25 cents to 504.5. Not bad, right? 4 cents off the high of the day there. And we got a Dees board, new crop, up a penny. 471.25 is last. So that's corn up anywhere between around about a penny to 3.5 cents going across that board. Let's go to the soybeans. This is a little bit heavy, isn't it? March down 17.25 cents. March beans down 17.25 cents to 10.26.25. That's just a half cent off the low. Now 10.26, like quarter cent off the low, one tick off the lows. We're 16 cents lower in July to 10.60, and that's on the low. That's no good, is it? And SEP, that's down 13.5 cents, and that too is on the low of the day, 10.41.25. And those are about, what, 16-cent ranges, too. 15, 16-cent ranges, and we're on the lows. So that's soybeans. Let's move along. Chicago wheat, let's give it an update there. 3 cents better. 5.80s last there, and that's in the middle of a, I'm going to call that a 12-cent range, right kind of smack dab in the middle. We got a July board up 3/4 of a penny to 602.5, and go all the way out to Dees wheat in Chicago. That's up just one tick to 633 3/4. How about the hard red in Kansas City? Let's take a look at those prices. Up 3 cents in March, 5.95 3/4 this last. We did get a 6 on it earlier. Look at that. $6.25 was the high, is the high. But right now, again, 5.95 3/4 is where we sit. We're 2.25 cents better in July. 614.5 is last there. And then if you move out to the Dees, 2.5 cents better there to 644.5. That's the hard red, Kansas City. Let's go up to Minneapolis and see what's happening up there. The spring wheat's up a penny in March, 619.25 is last there. We're actually down a half cent in July, 642.5 is last. Maybe that's real slow and we haven't updated, but we are up a half in Dees if you go all the way out the end of the market there to 669 even is last in Dees. All right, that's all the way out the deferreds. Cotton, let's take a look at that, up just one tick. Boy, oh boy. 67.41 is last there, which is only 6 points off the low of the day. So we'll keep an eye on that for you. Let's bring in our next guest analyst, right? That's going to be Mr. Scott Wilson. He's with CHS in Bloomington, Illinois. Is there a demarcation really between Bloomington and Normal? Do you know when you go from one to the other?
No, there's like a road that's supposedly the divider, but yeah,
it's like Phoenix. It's like Phoenix and Scottsdale. You don't know. Yeah. But anyway, thanks for coming on. What do you got for us? What are your thoughts? What's going on?
Well, energy markets trading down today. You saw the CPI report today came in a little hotter than expected. So I think that's going to probably push back some of these Fed rate cuts, maybe potentially a little bit longer. And then we saw some decent builds for some of the EIA data that came out. So so we're down today on that. A lot of stuff going on geopolitically out there. I think some of the sanction talk is some of the big news with the sanctions on Russia and now sanctions on Iran. But everybody's expecting tight supply potentially for the first quarter. But as you know, OPEC's going to start unwinding their production cuts starting April 1st. And then there's going to be additional production from the U.S. and other non-OPEC countries. So everybody's anticipating for production to outpace consumption this year. And lower prices are expected for 2025 than we had in 2024. And then lower prices again in 2026. With the current fundamental picture, obviously things can change pretty quickly.
Well, and there's some geopolitical pressure that's probably going to be put on it. I mean, the new administration's run on the fact that they're going to get oil cheaper. They're going to get these prices that come down. They're going to have to, I think, because we're going to have a problem with inflation. And I'll leave you with this. I think at the end of the year, you're going to look back and you're going to say, you know what? The word of the year was inflation, not really tariffs. I think inflation is going to be the bigger story. But right now, it's all about what's happening in tariffs. But once that settles down, this as we learned today, we might have a problem on our hands. I appreciate you coming on, Scott. Always great to talk to you. Thank you very much. Scott Wilson coming to us from Bloomington, Illinois. Let's go away, pay some bills because things are expensive around here, that's for sure. We'll come back right after this.